What's going on, guys? Today we are going to be talking about the top 5 tips for starting a crypto mining business. So the 5 things we are going to be talking about today is incorporation. We are going to be talking about taxes, IRS perks, budgeting, and also planning. So I kind of wanted to make a video, and this isn't going to be like a completely, edited video, kind of like the other ones I made. This is going to be like a 10,000 foot level on just what my top 5 things would be, looking back at when I started my crypto mining business and some of the other, ventures that I have done. What actually prompted me to make this video was speaking with some of the clients of Terra Hosting, which is a company that I own a part of. I am their COO and CFO. And I do talk often with clients. A lot of the questions that get raised is, taxes, incorporation, kind of how they should set up things on their end. And I have a brief history with this. Prior to GPU Risers, prior to Terra Hosting, I was a licensed tax attorney. I still am a licensed attorney. However, I do not actively practice, but I still do stay up to date with taxes, federal taxes, state taxes, things of that nature. So I figured I'd go ahead and make a video and kind of explain to you guys some of the things that I have spoken to my clients with over the past couple years. Now, again, I do want to emphasize that this video is going to be a 10,000 foot level, meaning I'm not going to go real in depth with any specific topic. I just kind of wanted to get those topics out there for you guys to think about, maybe speak with your CPAs about, and also kind of, have in the back of your head as it gets closer to tax season, as it gets closer towards the end of the year, where you guys might have realized gains or losses and different tips that you guys might be able to implement. Things I'm going to speak to you guys about are going to be taxes, incorporation status, IRS benefits, and everything like that. Now, incorporation is done by the state. So you can't incorporate a company federally, but the IRS is the federal taxing authority here in the United States. So a lot of people can, kind of define the IRS in multiple different ways. Putting it simple, they are a federal taxing agency, so they tax income, right? So every year, you guys, I'm sure a lot of you people watching this have a, W-2 or something of that sort, some income that you have, and they either take the taxes out of that, out of your paycheck, they just take it out right away. Or if you don't, you get paid, by a 1099 or something, then you'll owe taxes to them at the end of the year. They are an organization that was created and is there to be able to, kind of profit off of your profit, right? The more money you make, the more money they're going to make. So enough about the IRS. Again, there's different definitions and everything. Everyone has their own definition of the IRS, whether you like them, you don't like them. The reality is that there's things that the IRS can give you that help you, and there are things that the IRS does that maybe people don't always agree with. So let's go ahead and jump into the first thing, which is going to be incorporation, right? Now, a lot of people come and they ask me, do I need to be incorporated? Do I need to have an LLC? Do I need to do anything to crypto mine? And the answer is no. An LLC stands for a limited liability company, and there's a lot of different benefits to having an LLC. And again, this is going to be a 10,000 foot level video for you guys. But a large reason why people, form LLCs is to have a limited liability on, the activities that they're doing in the usual course of their business. Now, crypto mining doesn't really incur a whole bunch of liability, right? If I have this machine right here, which actually is mining Flux, it's a proof of useful work. That's a different video. But that is mining Flux right now. There's not much liability with this. It's in my house. It's not on a ladder that is in a public area that someone may trip over and get hit by. I don't really need to have an LLC for this. And then a lot of people also make the misconception that they need to incorporate or have an LLC in order to take benefits from the IRS, like tax deductions, such as, buying equipment and using the electric and the internet and everything like that. You don't need to be incorporated to take advantage of those tax benefits. Now, that said, the one reason why you might want to incorporate is it also establishes that it is a business, right? Like the IRS has a hobby loss rule. You can't have a hobby that you are saying that's a business that's constantly losing losing money, you have to be in it for profit. You have to be crypto mining in creating these machines and these rigs and everything in order to generate a profit, right? If you're not in it for profit, then it's a hobby and nothing is deductible. So an incorporation status kind of shows and proves that this is a business, right? If you get an FEIN number, from the IRS, then you can register a bank account, a business bank account, and you can kind of run all of your operations like that. But you do not need to be incorporated in order to run a business, right? Now, that's something I've explained to people. If you want to take advantage of these tax benefits, you don't need to be incorporated, but I do recommend that you do get incorporated. But if you're running this for profit and as a business and you're looking back and you're like, you know what, I should have incorporated last year. I've been running this business. I wasn't incorporated. I can't take advantage of anything that I bought, right? That's not true. You can take advantage of all of it. So I'm not sure what tax software you guys use, but there is something called Schedule C, and in Schedule C is a business outline kind of on where you can fill in all your business activities that you did. Whether the company is incorporated as an LLC, a single member LLC, you can also put that on Schedule C, but if it's not incorporated, you can also put that in there. And then on other schedules in your tax return, you can have depreciation schedules, which we'll talk about here in a little bit, and you can link that to your Schedule C, link that to your business to take advantage of these tax benefits. But to move on to the next part of this video, long story short, you do not need to be incorporated, but since the fees are so low to incorporate, I do recommend that you do, especially if you're at scale on this. And everyone's scale is going to be a little bit different, right? If this is all you have is just one machine, one card running, then it might not be necessary. It might even be a hobby, right? If you're not planning on scaling this ever or anything like that, it's not tax deductible. But if you're planning to scale it, eventually, once you get to the point where it's a high dollar volume for you, and that point is different for any other person, then I do highly recommend incorporating to establish a business. Now, moving on to the second thing is going to be taxes. This is a very complicated subject with crypto mining. There are a lot of different tax software out there named Coinly, and I think Bitcoin.taxes is another one. Don't hold me to that, but there are a couple ones out there. But I'm going to give you guys a very basic understanding of it right here. So just say you're mining, and let's use Bitcoin as an example. You have one ASIC, you're mining Bitcoin, and you get a payout once a day for that Bitcoin. Now, the second you get a payout, that is now income. That is on your books as income. So if your payout was $1,000, then you are going to owe tax on $1,000 of whatever your ordinary income is. Not including, of course, any deductions or depreciation that you might be, having for these machines that you're buying and everything. But to put it simply, you get a payout for $1,000, that is income for $1,000, and your tax liability is on that $1,000. Now, let's just say you got paid out at noon, right? And then you go to sell that $1,000 for USD at, just say, 8 p.m. I know it sounds crazy, but between noon and 8 p.m., that is another capture of income. But not in the sense that you're thinking about. So let's use the $1,000 as an example. You get paid out $1,000, you owe tax on $1,000. Then you go to sell it for, at 8 p.m. and let's just say you sell it for $1,050, right? Bitcoin goes up 5%. Then you are going to have what they call short-term capital gains. And that is going to be on the difference between when you obtained the asset, the Bitcoin, and then when you sold the Bitcoin. So in this case, you will owe tax on the $1,000, and then you will owe ordinary tax on the $50. So let's do it the other way, right? Let's say it's not a gain, right? You sell it at, a loss later on. So it's $1,000, so you owe tax on $1,000, and then you sell it 8 hours later for $950. You then have a cost basis of $1,000 and a sales price of $950, which results in negative $50, which is going to be a second taxable event. So whether it goes up or down, it doesn't really matter. That point that you have, the waiting point between getting a payout and then selling the Bitcoin or whatever coin you get, that is a second taxable event. Now, I do want to emphasize you're not getting taxed all again on it, right? It's just on the gain or loss that you had that will change your tax liability overall. So there are different rules with short-term and long-term capital gains, right? Long-term capital gains are when you hold an asset like that for over a year. So there are a lot of different, it's ever changing, so I don't want to say anything in the video about it, but do your research on this. If you hold these coins for more than a year, then you may be eligible for long-term capital gains, which will not be taxed at your ordinary tax rate, but will instead be taxed at 20%. Anyone that trades stocks or anything like this will probably be familiar with it. That's why they say always hold it for as long as you can, especially if you have a large gain in stock, because then you're going to be taxed at a lower tax amount. And the reason the IRS does that, in my opinion, is because they want to bolster and emphasize it's important to reinvest and keep money invested, right? They don't want people constantly buying and selling, buying and selling. It's good to leave your money somewhere and park the money. And for doing that, especially with stocks, it's reinvesting into the United States economy and everything like that. It helps the economy grow. So that's why I think the IRS does it. It's one of the benefits of holding for long term, but who really knows what they do and why they do it, right? So with that, let's lead into IRS perks. Now, I kind of see these as, benefits if you understand them or your CPA understands it. And these are going to be mainly, I'm going to focus on deductions. And then the main thing in deductions is going to be depreciation, because those are going to be the largest class of expenses that you guys have when crypto mining. So deductions are, expenses that you incur while running your crypto mining business, right? It could range from, a million different things, really, as long as it's used for your business and you purchase it for your business. So for smaller dollar things, let's use this pen, for example. I write a lot of things on paper, especially when I'm doing overclocks, when I'm doing anything like that, just doing, regular budgeting and ideas for crypto mining. If I'm buying this pen for my crypto mining business, then this could be deemed as like office supplies or something of that, nature in those categories. Larger groups of things, which would be more, geared towards equipment, that type of stuff is going to be things that you want to depreciate. So let's say you buy 10 ASIC machines, each one's about $2,000. So you have $20,000 in equipment. You can, either choose to front load that equipment now, which is called a Section 179 with the IRS, or you could depreciate the equipment over a period of years. So let's use 5-year straight line method as an example, right? So let's stick with the $20,000 of ASICs that you bought in this year. You're going to be able to depreciate $4,000 against your income for the next 5 years using that method, which if you have tax paid in or tax that was withheld through a W-2 from a job or anything like that, that will go against the tax that you already paid in, which means you might even get a nice little refund. Now, if you have a job where you paid in a lot of tax or you have a lot of income from other revenue sources or another business that you might own, the IRS does have a perk in the depreciation arena called a Section 179. Now, what a Section 179 allows you to do is front load that depreciation. Now, I suggest you look up these rules for Section 179, talk with your CPA or your tax preparer or something like that. But at the end of the year, it's really important to look at this. I'm going to talk about the planning here in a minute. But 179 allows you to front load all of that. You don't have to depreciate it over 5 years. Again, there are limitations, there's rules with this, so definitely do your own research with it. But that $20,000 that you spend on ASICs, you may be able to just front load that and write off $20,000 that year, which if you paid in, over $20,000 to the IRS already through a W-2 or whatever tax was withheld, or other gain that you had or income that you had from other sources that you might owe taxes on, that could offset your income. So there is a way to kind of do an analysis of what your tax exposure might be at the end of the year, and you might be able to take advantage of these perks. So that is going to lead me into the fourth thing, which is planning. Now, this is one of the major things, right? If you don't do proper planning, then everything I kind of spoke about just is irrelevant. So for this section, I'm going to explain, kind of a broad view of how I organize and plan my crypto mining, business, so that you guys have some sort of, basis on where I'm coming from. Now, I have been mining for a while. I've been mining since 2016. It hasn't really been on and off. I've never stopped mining since then. I have bought cards, I have sold cards, I have, bought equipment, I have sold equipment, I have, everything that you guys watching this have probably done as well. Now, in my position, I always wanted to crypto mine. I had a huge passion for it, right? I always really enjoyed it. I've always liked computers, but I wanted to make money on it, right? It was not one of these hobbies like, a jet ski where it's like, I know I'm going to lose money on this, but I'm having a ton of fun. Like, this was something that I saw that it was making money and I wanted to make money too. So throughout all of those years, I kind of have the same thing down pat on how I do it, right? As explained before, what is the actual income, right? It's right when you mine it, when you get payouts from the pools. Now, again, you can use Coinly. I highly recommend Coinly. They track kind of all your trades and let you know what your tax exposure is. But my planning for the expenses and the deductions, keeping track of everything has always been a big thing, right? It's not just how much you mine and how profitable you were with the equipment you bought. It's how, at the end of the day or at the end of the year, I guess, for taxes, is how you're positioned, because even if you have, a gain of $1,000 of crypto, if you don't write anything off, all the equipment that you paid for this, then, you're losing money and there's money left to be on the table. So what I do every year is I start actually around November, because I always kind of like forget things, right? And I know taxes are not due in November, December. They start, you can start filing in January the year after, but if you don't properly plan, you can't go back in time, right? And so what I do is, because this is a ever-growing, investment really into this business for me, is towards November I'll look, and I have Excel sheets, right? And every Excel sheet has different tabs, like I had EVGA, Newegg, Amazon, and in there every line item is a purchase that I made for my crypto mining business. And then you can categorize all of them, right? That then connect to the other tabs and everything. If you guys don't know how to use Excel, I highly suggest you learn how to do it. It's kind of a pain in the beginning, but after you know how to use it, it will save you so much money in the long run, and it'll help you with taxes tenfold. But a lot of people look at this part of this as finding out what your tax exposure is, which it all does that too. The point I'm trying to get is it's better to know what your tax exposure is prior to your taxes being due, the cutoff date, right? December 31st. Like, it's better to know prior if you're going to owe money or if you're going to get a refund, right? So let's just say it's November, right? We'll use this as an example. Like right after Thanksgiving, you have your Excel sheets, everything's there. You're working with the tax software, and you see that you're going to owe probably about 20 grand in tax. Actually, let's say you're going to owe tax on 20 grand of income, right? That's probably a better way to put it. So if I saw something like that, right? Like if I saw I owed, tax on 20 grand, that was going to be my gain from crypto mining and everything like that. The first thing I'm going to think about is I have kind of two decisions, and I can make both of these decisions prior to the new year. I can either, one, take the money off the table, right? I can take the 20 grand, it's a gain, I'll pay tax on it. And once I pay tax on it, it's free and clear, right? My investment made money, I'm happy, everyone's dancing around the campfire. Or I could spend $20,000, or of course $10,000, you know what I mean, or I could spend 20 grand on more graphics cards, on upgrading the NVMEs, maybe switching some of my, GPUs over to AI, buying Epic boards and stuff like that. I could spend $20,000 on that, which means my income overall for my crypto mining company, if I front load the depreciation on that equipment that I'm buying through Section 179, will be zero, which means I don't have any taxable income for that, and I won't owe any tax. Now, the downside to that, obviously, is you didn't take anything off the table, right? You took no chips off the table, and you rolled everything back in. So there is kind of a give and take really with this. Maybe you do that with $10,000 and then you only owe tax on 10 grand. Or you do none of it, take all your chips off, or you push all your chips back on the table. But it's very important to plan this, in my opinion. Plan it prior to the new year. Figure out what your tax exposure is. And again, the answer of how many chips you want to keep on the table or how you want to reinvest into your business. Maybe for you, watching this, it might feel a lot more comfortable. You're going to owe, just say 25% on your 20 grand that you had in a gain. You just want to take that 15 grand you have left, put it in a savings account, helps you sleep better at night. But if you're doing okay and you have a job and you're making good income, and you don't really need that and you want to keep reinvesting into this because it's making you more money, maybe put your chips back on the table and reinvest into your company. And this is kind of going to mix with the last section that I was going to be talking about here, which is going to be budgeting. Now, planning and budgeting are going to be different, again, like I said, for everyone. Everyone has a different situation. Everyone's numbers are going to look different on their tax return. Everyone has, family events that they might need to save money for, or they have, children or whatever it may be, right? Everyone's situation is different. So when people ask me for advice on this, I always tell them the same thing. It's going to be completely dependent on your position or situation, and your position in life. It's going to depend on your, risk tolerance, right? Some people are more risky. They just want to say, I'm going to invest every single dollar back into the business. I'm not going to take any money off the table. I'm not going to pay myself. I'm not going to do anything. And those people, often will put the chips back on the table. The more conservative people are like, I've spent 20 grand on stuff. I made 20 grand. I want to take money back. And yeah, I'll owe tax on it, but I don't really want to reinvest anything more. everything is going to be completely dependent on your situation, and these are only questions that you can answer yourself. But long story short, with this section I'm talking about with planning, is you want to be able to be in the position, everyone watching this wants to be in the position where they can at least make that decision. You don't want to be sitting in February doing your taxes and looking and being like, I should have bought more. If that was your tolerance, if that was what you wanted to do with your business, it was invest more. You don't want to be stuck in a situation where you're like, well, I can't now, I'm going to owe tax on it now, and maybe I'll do it next year, right? So you don't want to be that guy. You want to be able to answer that question prior to being, having the taxes due already. So I can't emphasize to you guys enough, definitely tax plan your business, see how much you have invested in all of this. That's a big thing with budgeting too. A lot of people will call, especially with, Terra hosting, for example. We sell ASICs through Terra hashes. We host GPUs. We are very big in the crypto mining community. A lot of the people watching this video have probably seen some of our partners on other videos and everything like that. And so we get a lot of questions for advice, like, how should I invest this, or what's the best miner to get, or whatever the new thing is, right? And so a lot of that, comes down to budget. And I never offer financial advice. You'll never really see me on here, saying buy this coin. I'll talk about projects, but I am not here to give financial advice on what coin to buy, or where to put your money, or where to park your money, or what machine to buy, or what GPU to buy. All I can do is kind of explain to you what I'm doing and why I'm doing it, but I'm not here to show you guys on anything specific. And so budgeting is like a big thing, right? The one thing I do offer advice on when people call saying, hey, this machine's making X amount of money per month, this is how much I have, how much should I buy? And my question always is like, you have to have a budget, right? Or my answer always is that you have to have some kind of budget in mind. And again, this is going to be like in the tax situation, right? Everyone's going to have a different answer to this. If you have $50,000 in your savings account and you're like, I want to invest in cryptocurrency miners and stuff, should you spend $50,000? My answer, no. Some people might say yes, you know what I mean? But it's finding a budget that you're comfortable with, and at least get to that point, right? Even if it's way more risky than I would be, or way too conservative compared to what I would put in, then, again, that's an answer that you have to answer for yourselves. And my advice here is to just at least create a budget that you're comfortable with. Never ever buy any equipment on credit cards. Never ever take out loans for equipment. Never use necessities, like money that you need for necessities for living, on stuff like this. And so that's why I say, find a budget, guys. Like, definitely get a budget. Whether you're buying crypto coins, coin ABC or whatever, if you have a budget monthly that you can put, that you can risk into this, at least you have a number, right? And for building equipment out, or building mining equipment, or, equipment like this proof of useful work rig here, these AI machines, I've been very big into that, make a lot of videos on that stuff. Have a budget, and don't go over that budget. Again, Excel spreadsheet, make an Excel spreadsheet, and you can see it in front of you, right? And budgeting goes a lot with planning, right? A lot of people that are doing tax planning before the end of the year, they see what their tax exposure is. Oh, I need to spend, X amount to, be able to, offset my income from my overall income, right? I want to invest back in my company rather than pay the tax on it. Still, in that situation, find a budget, because especially with this crypto mining stuff, when you see dollars start rolling in, or AI, or really anything, you start seeing money roll in, your budget will fluctuate, or you'll stick to your original budget and you'll be like, well, for only this much more I can add this, only this much more I can add that, I guess I could squeeze it. If you're asking yourself in your head a question saying, and the answer is, well, I could squeeze it because it's making this much right now, then don't do it, because whatever you're thinking might be making money today, might not be making money tomorrow. And sadly, I have seen people put stuff on credit cards. I have seen people take loans. I have seen people do all of this, and assuming that this hardware is going to make them tons more money. And in many cases, it actually did. But again, in many cases, more often than not, it doesn't. And then people don't factor into the interest on these credit cards, the credit utilization, what it does to the credit score, and again, life, right? Like life is not like a fixed variable. Life is, everything changes. One day can be completely normal, the next something crazy can happen, and you need to liquidate stuff and everything like that. So I can rant forever about this. I'm sure everyone watching this knows this, but I kind of wanted to give you guys just the top 5 things that I've seen over the past couple years when it comes to starting crypto mining businesses, the 5 most important things. And again, that's like incorporation, taxes, IRS perks, right? Like depreciation and, being able to front load that and not front load it, everything like that, deductions for your company, and budgeting and planning. Those are, I would say, the top 5. It definitely pays its dividends to be organized. It pays its dividends to be a planner with this, plan ahead. And if it's all set up correctly, you guys can really take advantage of this. So I didn't want to make this video too long, so I'm going to cut it off here, but drop some comments down below. I'll try to answer as many that I can. Again, I don't want to get too direct. I don't really like offering, too direct of advice in specific situations because everyone's situation is different, right? Like something I might do is going to be different than what you would do. We're all human. We're all different. But I'd like to answer any questions that, are generic enough that could help you guys. And if you see another person, with a question down below, comment something that you also would like the question answered. I could do a follow-up video. I know I mentioned that years ago. I made business videos on how-tos, and it was a lot more structured, a lot more serious than what this video is. I've tried to get a little bit more lax as time goes on. No lights or anything like that here. But go ahead and thumbs up those comments. Again, I could do a follow-up video and just answer maybe 4 or 5 of these questions, or you can jump into a live stream that me and the Veteran Miner have. If you're just tuning into this video, there's another YouTuber and another business named the Veteran Miner that's in the community, and him and I and GP Risers, we all work together, and we have a live show every Wednesday called Wired Wednesdays. So we switch off on each other's channels. You can subscribe to me, subscribe to him, and every week we have the show on a Wednesday, and we switch off on the channels. So you can catch us on there and ask questions. Pretty much every show we do an AMA. You just pop in the chat, ask a question, and tag one of us, and we'll answer it. So thank you guys so much for watching. I'm going to be doing more videos here. I finally got my whole desk area set up and everything like that. So I got the camera here. I got a light too. So you'll see some videos where it's dark out. I know I don't have blinds, so it's like blaring in right now. But I do have lights and stuff. So some will be at night, some will be during the day. But I'm going to put more content out for you guys. And I am very more so geared towards the business side of things. So any questions, drop them down below. But that's going to be everything for this video, guys. I hope everyone watching this has a great rest of their day, and we'll see you guys next time.